Well done to them. So the bad news, GDP data shocked and saddened South Africa today, and an unexpected economic contraction is going to give South African finance officials more sleepless nights. While the South African economy grew in the second quarter of this year when compared to the same quarter last year, on a quarter-to-quarter basis, the economy shrank by 1.3%. Many analysts had been expecting growth. Markets and the rand basically ignored that data. Global markets were breathing a sigh of relief after yesterday's sharp drops and the JSE ending significantly higher. The rand even strengthened after that GDP data was released. Still, it's very bad news for our economy. Let's look a little bit closer now. The red line shows year-on-year growth. The blue line here shows quarterly growth. You can see it's much more volatile. This is the dip in 2014 at the beginning of last year. Quarterly growth contracted. That was linked to the very protracted strike in the platinum sector. Then we started climbing. The economy grew by 1.3% in the first quarter. That was already bad enough, but now a contraction by 1.3%. Overall, if you look at the yearly, we're up by 1.6% for the first half of this year. Government has been saying that we're still on track for growth of 2% for this year as a whole, but many analysts are saying because of this dip, we really have to revise that. It could be even slower. 2% in itself, not enough to pull millions out of poverty and provide jobs. Let's look at the different sectors. Mining, of course, once the sector on which our economy grew, now it only accounts for 8% of economic growth. Mining contracting by 6.8%. Manufacturing also contracting 6.3%. And agriculture even bigger. That's, of course, because of the drought conditions. But these are the productive sectors of our economy. They are the sectors that create jobs. The sectors that are growing, finance, personal services, things like that, often don't create jobs when they grow. So this is the real concern. Let's get a bit of analysis now. I'm joined by Kevin Links, Chief Economist at Stanley. Good evening to you, Kevin.
Good evening.
So should we focus on the fact that we're growing year on year or contracting quarter on quarter?
Look, I think the quarterly number is the most concerning because it suggests that the economy has lost a lot of momentum in the short term. And I guess we're worried that that loss of momentum continues on into the second half of the year. And it's entirely possible that South Africa experiences an outright recession. And that would be quite problematic in terms of job creation. So for us, it's a concern that it's a minus number. We certainly weren't expecting that much of a decline. It's also a concern that the weakness is broad-based. Sometimes we get a poor agricultural season or some strike within the manufacturing sector that disrupts industry. But this slowdown or this negative number was, I felt, very broad. Even the sectors that are growing, if you look at that growth rate, not particularly strong. So I think the takeaway for me is that this is a broad weakness in the economy, and it's a clear loss of momentum. So
a recession is possible, two quarterly contractions. Is this not largely due to the drought that we saw agriculture really pulling us down?
Look, agriculture has clearly played a role, and we've had a particularly bad agricultural season. And obviously we're still going to feel the effects of that in terms of higher maize prices and generally some high food inflation. But agriculture is not the biggest determinant of what's happening broadly in the economy. You've got other factors. You've got weakness in China that's hurting our commodity prices, that's hurting exports, that plays a role. We've got weak consumer confidence. Consumers are under significant pressure because of price increases like electricity. We've got the lack of electricity impacting the manufacturing sector. It's difficult for manufacturers to show consistent production if they have to worry about electricity outages. So I'd say we've got a range of factors that are hurting us, and in particular confidence across the business community and across households, especially weak.
You sound miserable about it. I am too.
Yeah.
How dire is this for lay people out there? You hear our economy is contracting. What does this actually mean? How deep is this problem?
Look, I think it's a significant concern. The reason is that South Africa desperately needs to create jobs, and we cannot afford to lose jobs. When you see a number that's as weak as this, a minus 1.3%, what you know down the line is that invariably businesses are going to be restructuring. This is telling you that business is under pressure. They're facing a number of cost pressures, be it electricity, water, salaries, and they're clearly not able to generate the type of sales that they would ideally want. And businesses then would have to adjust to that, and generally that means retrenching, restructuring. We've seen some of that adjustment in the mining sector. My suspicion is you'll see more of that. You'll see more in manufacturing. And as we retrench, what then happens is the economy just simply gets weaker. And it's very difficult to pull us out of that. And in an environment where we've got 25% unemployment, where we've got 1 million children that start school every year, we have a huge responsibility to create job opportunities. A minus number at this point tells us those job opportunities are not going to materialize, and that feeds into a whole lot of social tension. So I think we would be concerned, and it puts South Africa, the South African system, at risk. It means that we're more vulnerable in the global environment, the currency is more vulnerable. There's no upside to the number.
Like you even say, a possible unrest, more people unemployed, restless, desperate. Is this confirmation as well of full-blown stagflation? So not only is there low growth, many people unemployed, but they face rising prices because of inflation. May we even have an interest rate hike?
Well, we've had some interest rate hikes. The rate hikes have been fairly modest, but obviously the Reserve Bank has been very clear in warning that they may have to put rates up a little bit further. We've got a strange situation where inflation's moving up and probably goes above the inflation target of 6%, and I think goes above that target early next year. And clearly the Reserve Bank has a responsibility to control inflation. They don't have much they can do about it other than move interest rates up a little bit, and I think they'll continue to look to do that. They will bear in mind, though, that if they keep increasing interest rates, then they undoubtedly do push this economy into recession. So they will try and find that balancing act. But it means that if you've got a lot of debt, you've got to expect that interest rates may well go up, not necessarily immediately, but over time will probably increase a little bit and put you under pressure. This is not the time to take on a huge amount of debt. We've also got to recognize this is not the time to risk losing your job. It's critical that people maintain their incomes and try and afford to maintain their lifestyle, because I think if you start to lose jobs now, it's going to be difficult to find that in the short term. It's also a time when we need to be looking inward and look at South Africa and say, what is it that we could do better to lift the growth rate? Are we doing enough? Yes, we have the electricity constraint, but I'm quite convinced there's more we could do to try and help ourselves.
Well, somebody said today, you know, this data, perhaps a shock, but our economy needs a shock treatment. Something's got to change drastically very quickly. Is that possible? Could we come together and turn this around?
It certainly is possible. I think that there are parts of this economy that are in good shape. We know the business sector is sound, it's well managed, it doesn't have a lot of debt, it's sitting on reasonable amounts of cash. So the business sector could well play a bigger role, but clearly business feels a little bit marginalized, feels that
not happy with what's happening politically, basically.
Yeah, it's worried about political policy, it's worried about political statements, it sees political infighting and gets put off by those events. So there's no doubt that we could pull business up in terms of playing a bigger role in driving this economy. We also have got things like the National Development Plan as a policy initiative, and we somehow seem to have moved away from that. There are key factors that we could implement in terms of the National Development Plan. We've talked about rolling out infrastructure in this country, whether it's roads or harbours or airports. We could do a lot more, I think, in terms of that. So I think there are initiatives we can bring to bear fairly quickly. I think we've just got to start to set the right message. From my perspective, we've worried too much about the politics and political infighting in South Africa and cared less about the economy. It's time for the economy to take centre stage and obviously to try and lift confidence.
All right, thank you for your analysis. Unfortunately, Kevin Links from Stanley saying a recession is possible.